Please subscribe to the channel, press the bell icon, you'll be notified of the latest videos. I'm Sage, thanks for joining us for Kalkine's educational series. Today we're covering what do we mean by obsolete stock. The term obsolete means something which is no longer useful, and similarly obsolete stock refers to the inventory that has lost its original value either because it has become old and has been in use for a long time. It has become outdated and better options are available to replace it. It also refers to the stock which is no longer in demand in the market because it has reached the end of its life cycle. What does obsolete stock mean for a company, and how are obsolete stocks calculated? Having large quantities of obsolete stock in a company's warehouses is not considered a positive sign. And usually those companies or businesses are left with large quantities of obsolete stock which have either failed to understand a decline in demand or ignored the company's stock replenishment policies for a long time, and therefore it is good to eliminate obsolete stock. If this is not done, these stocks are mentioned in a company's balance sheet as working capital with a limited return on investment. Therefore, it is necessary to write off these stocks, as otherwise they could create an illusion and be considered assets. Obsolete stock is also referred to as dead inventory or excess inventory. Inventory or stock refers to the goods and materials held by a business that is ready to be sold. Stocks are assets of a business operation, as they account for a huge percentage of a company's sales revenue. Earlier, when the technology was not developed, stocks were considered obsolete if the goods and materials were held for too long. However, with technological innovations, an increase in options available to the customers and their high expectations have changed. As of now, the life cycle of the products has become shorter and stocks have become obsolete much faster than the earlier times. It is a fact that when a business person fails to sell a particular good and material to the customers for a long time, it means that the value of that stock has considerably declined and it is now of no use for the company. And therefore, timely recognition of this fall in the value of a particular stock is important for a business operation. And the company should write off the obsolete stock in its financial statements as per the generally accepted accounting practices, or the generally accepted accounting principles, GAAP. So what are the implications of the inventory write-down? Write-off reduces the value of the inventory, and in the case of accrual accounting, there are chances that the management may choose to make an inventory reserve account to compensate for the future losses because of the change in inventory valuation. And write-off affects the cost of goods sold for a given period. It has a significant impact on a company's balance sheet too, and this is because any change in the value of stocks will ultimately affect the profitability of a business. How can a business keep a tap on obsolete stocks? One way to reduce obsolete stocks is by tracking the products based on their life cycle. And once a product becomes obsolete, it is next to impossible to provide you with any profitable return on investment. Therefore, it is important to carefully monitor when a product's sales begin to hit a downward trend and thereby make changes in the reordering parameters to match the demand in the market. Further, if one finds an excess stock of certain goods, efforts must be made to accelerate the sale of the concerned goods or products before they become obsolete. Companies can avoid obsolete inventory if they have good inventory policies and better understand the consumer's behaviour and demand. Thanks for joining us. If you like the information, please like, share, comment on the video below. Subscribe to the YouTube channel, just press the bell icon, you'll be notified of our latest videos. For more information, regular updates, head to the website, kalkinemedia.com. And this is Sage for Kalkine Media.